Joining me now is Dale Smothers, CEO and President at RDS Wealth. Dale, welcome to the show.
Nice to be with you, Ashley.
All right, so we are about 30 minutes away from the start of today's session. What are you going to be following most closely?
Yeah, clearly the market's going to open up a little bit low today. We're not as concerned about that maybe as some may be. I look at each day maybe as looking at each snap of a football game. Overall, I think the game is going the way that we would intend for it to go. I know that AI has had a little bit of a pullback here recently, but I do think that dip is going to be bought by investors. I like the broadening out that I'm seeing in the market, and while today may open a little bit low, I do expect the next couple of weeks to be a positive trend for investors.
And speaking of the next couple of weeks, next Wednesday, December 10th, at 2 p.m. Eastern, the Fed will hand down its decision about another possible rate cut. A high number of investors are pricing this in. What is your prediction for that meeting?
Yeah, I think we're going to see a rate cut. It's certainly at least 25 basis points. I know there was a period of time where that was in question. And to be real frank with you, Ashley, if we don't see a rate cut, I think the market's going to react negatively to that. I do expect this rate cut to take place, and I think that continues into 2026. Rate cuts are likely here to stay for the next 4 or 5 meetings, most likely. Whether or not that's fully data dependent is probably up in the air, but I think there is a high wire act going on right now. The Fed has to decide which is more important to protect, and I think labor is going to be the thing that they're watching more closely than inflation. For that reason, a rate cut takes place.
Why do you think the markets will react negatively if that rate cut doesn't happen?
I think it's already priced in. I think that the Fed decision for December was already priced in probably back in October. And even into November, we saw a little bit of a dip just from the uncertainty of what a rate cut could be. We got a little bit of clarity with some of the Fed executives coming out and actually saying, we are expecting a rate cut. We saw that dip be bought back up ending November. December 1st, first day of trading, we are seeing a little bit of pressure on the markets. But I think as we go into the Fed's decision, if we see the Fed decide to take a step back and pause and not cut, we're going to see a sell-off in the market for sure.
All right, and what are your predictions for the Fed in 2026, Dale?
Yeah, I think we continue to see that rate cut. As I said, I believe that rate cut continues not only for the data, but for who's going to be elected. I think who's going to be appointed, rather, as the Fed chair. We saw President Trump today come out and said he's made the decision. That decision may be announced as early as Christmas. That Fed chair coming is going to be a dovish cutter for sure, in my opinion. I think we're going to continue to see a rate cut every single meeting for the first 2 to 3 meetings that new Fed chair comes in. I think you're going to see that rate cut continue to take place, and the market will like that.
All right, and we've seen a lot of choppiness in the market and reaction in the market to the AI trade. Mm-hmm. What is your take on the AI trade, and are there any other sectors that you're looking at right now?
Yeah, the AI trade has certainly been traded down, but if you look at just NVIDIA alone, it's almost a team. Which team are you on? Are you on OpenAI team or are you on Google team? This new GPU replacement, the TPU, that's the new kid on the block, and everybody wants to be their friend. Google has been bid up for that reason. NVIDIA has been bid down for that reason. The GPU is still the heavy lifter in AI. I think this AI dip is going to be bought back up. I also believe, just like NVIDIA's last 6 dips of more than 10%, you saw an all-time high reached shortly after. That's going to take place. And on the back of that, names like CoreWeave and Applied Digital are also names that I'm watching. Other sectors that we're paying attention to right now, I like silver and gold, these precious metals that are going higher. That might be reading a couple of tea leaves of what the investors are feeling in the macro markets. But I do believe that there's a demand, global demand, for gold and for silver. Silver plays into the AI trade as well because technology depends on silver alone.
All right, and any non-Fed storylines that you feel can have a strong effect on markets between now and year end?
Yeah, I mean, we just had one of the strongest Black Friday spending of consumers in a long time. It's a historical Black Friday. We have also got Cyber Monday coming up. So Cyber Monday is going to play a big picture in this to see how strong that consumer actually is. And I believe as we start to see this consumer strengthening and a broadening out in the market, that is going to give us the optimism and really release optimism optimism that I think is pent up in the market right now, releasing that optimism to the consumer and to the investor, saying this is now a good time to start buying some of the names that have been sold off in this most recent dip.
And how are you advising clients right now?
Yeah, so if we have clients that are, let's say, 12 months or less from retirement, which we work with a lot of retirees, that's our primary focus. Our objective is to understand this rule. Losses hurt us more than gains help us. So I think that we've got this growth story in the portfolio, but it's not the overall portfolio. We've got to be conservative. We've got to be looking for strong dividends. I like names like HDV for that. I like JEPI, where we're buying blue chip companies, selling covered calls. I also like buffered ETFs. There's a buffered ETF you can purchase today that gives us 15% protection on the downside of the NASDAQ. So if you want to play the AI trade, let's play it there because we have 15% protection. We cap those gains at around 15%. What that means is if QQQ finishes up over the next 12 months, 20%, you're only up 15. But if it's down 20, you're only down 5. That's a really strong place to play if you're wanting to be in the AI trade, because right now, like I said, that high wire act that's being walked by the Fed, the market could move one way or the other. In my opinion, it's going higher, but retirees can't take that gamble.
All right, Dale Smothers, thank you so much for joining us at the New York Stock Exchange.
Yes, ma'am. Nice to be here, Ashley.